Hello, this is Brian Shannon from Alpha Trine's blog spot. Today is Tuesday, the 27th of November, 2007, and the market's closed. S&P 500 back up today. So up, down, up, down. The choppiness continues in this market. The market is deeply oversold, but again, the path of least resistance is lower, and that means that it continues to favor further downside. But there were some encouraging signs today, in particular for the NASDAQ, as we'll see in a moment. You can see that yesterday it experienced what we call an outside day down, where it completely engulfed the prior day's range. Now today we have an inside day, meaning it traded within the prior day's range. So basically, we've got a lot of indecision in this market right here in the short term. Longer term, though, again, we've got a more bearish-looking picture. And if you look at the video that I had made last night regarding the longer-term picture for the S&P 500, I still think that, just historically based on the magnitude and the timing of sell-offs that we've seen in the past, that this market is due for a rally, and if it does rally, then it could head up all the way towards this declining 200-day moving average. And it's important to see that that is declining. So if it was to get up there and then fail, again, that could paint a much more bearish picture for the longer term than what we're really seeing right now. It's still kind of, in this indecisive area here. We've experienced a large sell-off again, but let's focus on the shorter term action and see if we can make some sense of this. What we have here is we still have a declining 5-day moving average. That 5-day moving average is being tested more frequently, though, and that could potentially signal a turn. You also see that this level has been very important here, at least over the last week or so, at about 143.30, and we have right here, we have higher lows leading up to these more frequent tests of that level. So it's possible that this market could be getting ready to turn higher. But again, the daily time frame does not favor it. We've got a lot of mixed signals. That's the clear message here, is that there is no clear message. It's mixed, but the larger term picture is down. We've also got this declining trend line in here that comes into that same area. The more important level, though, is continues to be near that 145 area, and we can take a look at a longer term chart here, longer term meaning on the hourly time frame, and see that that 145 level right in here may be the area where, if we can rally somehow, first of all, above this level, 143.30 or so, then it's likely that the next resistance should be met near this declining trend line. Then maybe it pulls back and finds support right here again. So I'm outlining a potential scenario. But basically, if we could rally up to that trend line, pull back, this 143.30 that has been resistance here the last 2 days, acts as support, then we could test that 145 level. And by that point, it might have built an inverted head and shoulders pattern in here and create the catalyst for a move up to 148. That's one potential scenario. But again, you have to be open-minded basically to anything, especially when we have this market up and down as much as it is. What I did already was to draw these in. I've been pointing out the divergences on the hourly time frame on this between price and the MACD, and we've got another one in here. So that lends a little bit of credibility to the theory that potentially we could move higher. Again, I've got to stress, though, that it's a very choppy market environment. The path of least resistance on the daily time frame is lower, but it's oversold, it's due for a bounce, and we're starting to see a little bit of that evidence come into play. The advanced decline line was very strong today. It's 2 to 1, two stocks up for every one down. That's a lot stronger than it's been a lot lately. And you can see that the sellers tried to gain control about 2:30 this afternoon. That move failed, and then the buyers came in and squeezed those shorts right back up to that resistance level for the day. So very choppy action continues in the S&P 500. The semiconductors had a good day. These were up 2%, but again, this chart just looks like hell. There's really no reason to think that there's any bottom in here right now. If you look at the 10-minute time frame, maybe we're finding a little bit of support in there, and above 412, maybe the shorts get squeezed a little bit. But any rally that ensues from here is within a primary downtrend, so If you're going to trade the long side, then you have to be very cautious. You have to trade smaller share size. You have to admit you're wrong very quickly because it's more likely that we're going to continue to unravel. The IWM today was up 1.4%. This 73 level seems to be very important for this market overall. And again, it's deeply oversold down here recently. And I think that, you know, a little bit more stabilization in here. Maybe we get a rally, even back up to, yeah, I could potentially see it back up towards that 78 level. But it still wouldn't do anything to damage the downtrend here if it was to get back up to 78. I think it would still fall within a short squeeze rally, and that it would be an opportunity to look for a failure for a short. The short-term time frame here, if we look at the 30-minute time frame, you can see this is the more valid trend line. We do seem to be finding some support in here. Maybe it turns, it's risky, but this 74.40, 74.5 level, maybe we could see that same type of scenario that I just outlined for the S&P 500. But again, it's you've got to be very aggressive in this market, or I think just sit on the sidelines. The NASDAQ 100 showed a little bit more volume today, and it was up to 2%. So yesterday I outlined that descending triangle pattern that's forming in here, and we do still see that pattern forming, but I also wanted to make you aware of that patterns can and do often fail. Case in point was Baidu. If you look at Baidu on a daily time frame, this weekend I saw a lot of people mentioning this head and shoulders pattern. And what's obvious a lot of times is obviously wrong. And the people who have been selling short Baidu based on that head and shoulders pattern need to realize that the pattern is considered complete when it breaks down. It rallies back up, finds resistance there, then continues lower. That's the way to trade a head and shoulders pattern. But even if it lays out the most perfect scenario and sets up an entry perfect, you have to have your stops in place just in case it fails. If we look at the NASDAQ, we've still got this downtrend line that I drew yesterday in place here, and the most relevant resistance level from the recent trading is at about $50.40. But again, this pattern is still valid. It's going to take a break below about 48.80 or so for it to break down. And if it does that, then I think you're going to see, again, a move. The measured move would take it down to about 46.5. The daily time frame suggests maybe a little bit of support, perhaps near that 200-day moving average. Yesterday, I was more confident that that would get hit this week. Today's action, what can I say? I mean, it's back and forth. You can't really make much sense of it. It's been, you know, the NASDAQ has basically been neutral for the last week and a half in here around this $50 level. So either scenario could develop. The path of least resistance on the daily time frame here is lower. So just if it sets up bullishly, there's nothing wrong with taking the trade. I'm probably going to get involved with it as well, but I'm going to be very quick to exit if it fails. If it fails and breaks back down, then I'm going to get aggressively short. It's just day by day in this market, and truly a trading environment where you have to be very defensive.